Frank, it's great to have you here with at the MTA Symposium 2014.
Nice to be here.
So if I can start off with the panel that you just kindly hosted for us. It was on with buy-side panel speakers talking about fusion analysis. So if we could start off just focusing on that, what do you feel is a definition of fusion analysis within what you do and within what they do?
Well, I'm a strong believer that technical analysis or technical information embedded in the technical information that we look at is fundamental information and economic information. All the drivers of stock prices aren't technicals. Technicals aren't the drivers. So for me, as a portfolio manager, it's always been about fusion analysis. The fact that I can recognize trend changes and the persistence of trends. I know embedded in that is fundamental and macroeconomic information. That's an assumption I'm making, but I think it's a very strong and pretty easy leap to make, given the fact that over time we always find that the reason stocks trend up or down is for fundamental and economic reasons. So I think there's a real good kind of philosophy here embedded in what we do. A real advantage, I think, is that the market is interpreting all this information, and this information is other information that is being researched elsewhere and being done elsewhere. So I think it's a really great theme. I'm glad that this is the way we're moving.
And what edge can technical analysis provide within that fusion, within the mix? What do you think?
Well, I think that the edge, so to speak, if that's the word we're going to use, is that embedded in price is a lot of information. You're basically looking at price, and price embedded in that is fundamental information, not fundamental analysis, different. Right. Fundamental information and economic information, right? And analysis by definition is fraught with a lot of bias and a lot of error, and all the inputs drive the outputs there. But the reality is, with price and trend and relative strength, which I didn't get to address today, right, embedded in that is how persistent and how strong the underlying fundamental and economic data might be in support of stock prices or any kind of other asset that you want to analyze. I always think about the idea that is the wind at your back or is the wind in your face? Right. And when changes truly develop, fundamental or economic changes, when they really, really happen, they persist. Think about it like the Titanic. It's not a quick turn. It's not fundamental change happens and then aborts. Economic change happens and then it aborts. It tends to persist for some period of time. And I think technicals give us an insight into the persistency of that and when that might be changing, right, and then when it is actually changing. Everything is an incremental change.
And on that point of change, which is so key these days, when people are waiting for change and maybe forecasting change, what would you say are maybe some of the pitfalls within our industry, if we can kind of speak about it from an abstract perspective, but also this idea of evidence-based analysis, which I took away from your overview at the very end in terms of waiting for the facts, trading the facts.
Yeah, I mean, I understand the whole idea of, I've been in the business for over 25 years now. I can't believe it's that long. And there's something about forecasting that's really attractive, being able to tell people what's going to happen. And there's a trap there. And I asked a question out loud today, and I asked them, what's the risk in forecasting? And I heard shouted out that you're wrong. And that's actually not the risk. The risk is that you're right. The risk is that you're right because now you think you can actually do it. And forecasting is very, very hard. And the conditions in the market enable your forecast to be right. So the reality is, for me, if you incrementally just acknowledge what's happening today, every day, every week, every month, every quarter, every year, just incrementally every day, look at the information. Are you on the right side or the wrong side of the information? Because things don't change all the time. We just think they do. If you're there, just incrementally adapting and acknowledging the information at your disposal. Long term, you're going to look like a pretty brilliant forecaster by just doing that. So that's kind of how I think about forecasting and grounding yourself in what's going on. I don't know if I don't have a better answer than that.
Sure, and in terms of what that might do for kind of human behavior, how it might kind of protect us against our own vices, what would you say in terms of your years of experience?
Yeah, well, my experience and is that I do have a lot of conversations with myself, not out loud, so to speak, but in my head, right? All the information that I'm trying to process is bouncing around. What do I think about this? Should I react to this? Should I do this? And it's very easy to convince yourself to react to a lot of different information points because we're inundated with it. There's a lot of information, not just in the market, but in your email box. There's a lot of research being written, a lot of different points of view. The reality is that more likely than not, only one point of view is actually correct. And the point of view that's correct is the one being expressed by the market. Sure. So the way that I have grown over time, and this is a work in progress, I mean, this is not, completed work, is to gradually continue to acknowledge pieces of information so that I'm actually acknowledging those conversations that are taking place in my head. So if something's happening, act on it, especially if there's relative. For me, I think the most powerful tool that we actually have that we can use confidently is relative strength. So if there's important relative changes, relative downtrend breaks, relative breakouts, whether it be 3-month, 9-month, 12-month, whatever scale you want to use, at some point you have to acknowledge that, because for me, it's very difficult to outperform over this period of time, unless you outperform over this period of time. It has to start somewhere. Here, here, and that's how you get to here. And I think if we appreciate that, I think we'd all be better off, and then we could also put ourselves in the position of, investing assets, being a portfolio manager, so to speak.
And as a kind of a lasting question, Frank, I mean, you're in a unique position where you can kind of see a lot of the industry in your years within the industry, but also positionally. Where would you say the trend of technical analysis is headed in the years ahead, and within the industry and within what we do?
I mean, it's tricky, right? Because it's 2014. We are 6 years removed from the end of the world, where a lot of departments, research departments, were rationalized. I'm not exactly sure that that's going to change anytime soon. Sure. So my advice is to continue to build your own personal educational portfolio, not just with the CMT, although the CMT is a darn good start, but CFA designations or business degrees. I think all of that is important to try to put yourself in the position where you can be looked at as someone who can contribute to a firm when, not if, when these decisions to rationalize actually change. And they will change, particularly if we're on the doorstep or within the early innings of a new bull market, which again, you have to accept that that's what's going on because the trend is up and it's pretty persistent and pretty powerful. And if equities and asset allocation products continue to expand, there's going to be more need for people who understand the market. So on the sell side, there's plenty of good research being written. I get a lot of it. I really enjoy consuming it. On the buy side, there's a little bit less of that. But I think that there's an opportunity there, especially for well-diversified students of the markets, not just technical students, but fundamentally based students as well. And I think we have the door wide open for this organization to embrace that opening that I think is not too far out in the distant future.
On that very optimistic note, Frank, it's been a pleasure interviewing you today.
Thank you, my pleasure.
Thank you, Frank.